Welcome to Fisher Webinars. The following is a recording of Will China's Recovered Paper Problem Become Your Problem? Originally recorded on Thursday, May 24, 2018.
Thanks everyone for joining us today. We're going to talk about uh, this issue with recovered paper in China. Now, you've signed up for this webinar, so most likely you're familiar with the recovered paper situation in China, but just to be sure, let's go ahead and set the table for the discussion we're going to have for the next 30 minutes or so. So first, let's just talk about a couple of points of fact. One point of fact is that China imports millions of tons of recovered paper each year that they use then to make various paper and packaging products that are really very important parts of their economy. Another fact is that we know that over time, recovered paper has been, along with that recovered paper, has been an awful lot of unusable waste. So glass, plastics, other types of materials that are not a valuable natural or raw material for the use in the production of paper is coming along with that, which is presenting a big problem. We think that the numbers aren't precise on this, but we estimate that China sends about 25 million tons each year of waste paper to the landfills. Now, let me make another definition here. You're going to hear me talk about, in this case, waste paper, which means garbage. It has no value. That's why it's being sent to the landfill, or it has no current value. That's as opposed to recovered paper or recycled paper. That does have a value. Again, that's a valuable resource that companies can use to make additional products from. So they're sending a lot of waste paper to the landfills today, and that's expected to grow and grow quite dramatically. We think probably by 2025, at least 40 million tons, maybe as much as 65 million tons of waste paper will be going to the landfill. But that's not just China's problem. It's not just a paper problem. This is an interesting chart. This comes from the World Bank. The y-axis here are annual tons in millions of municipal solid waste, MSW. This is garbage that goes to the landfill or has to be dealt with in some other fashion. The x-axis just shows a number of larger companies or countries. You'll notice on the right side of the axis here, the United States today generates more solid waste than any other country in the world. China is a close second, but look what happens in the out years. As we get closer to 2025, China's production of municipal solid waste is just going to go racing past the rest of the world, and this is creating a big problem that China has to address. So faced with that future, China's government, rightly so, said, hey, we have to do something about this. So one of the things that they did was last summer, around July or so, the government of China informed the World Trade Organization that they would be implementing a ban on unsorted waste paper coming into China. And at the same time, they also tightened up a lot of the quality requirements for other types of recycled paper, so things like OCC and other grades. Those weren't part of the ban. That was really just for unsorted papers. But OCC and others, if you will, kind of got hit by the shrapnel because those tightening of those requirements made it very difficult for many exporters to meet. Therefore, they didn't have a product that China would accept. Well, in short, those actions worked because what's happened is we've seen a dramatic drop-off in the amount of recovered paper that's being imported by China. Now, some of you may have seen this news just recently here that back at the beginning of May, the Chinese government kind of took another step forward. They closed their North American inspection arm, which was the group that looked at products leaving the United States bound for China and did some pre-inspections. They closed that down, which essentially banned all exports of recovered paper from the U.S. But just this week, they have reversed that decision and they have begun doing those pre-inspections again as well. Now, I've seen a lot of press about this in the last couple of days, but I'll give you my take on this. That does not mean that exports now are going to flow freely from the United States. They didn't lift the bans. They didn't change any of the regulations. All that happened was we kind of went back to the status quo where we were before May 3rd when they originally announced those closures. So I don't think that action in and of itself really is going to have much of an impact going forward. The other thing that we've seen happening is I've talked to some exporters of recovered papers, and they've told me that they just stopped shipping to China because there's so much uncertainty around how these requirements are being understood and implemented by the inspectors in China, that the fear of some of these exporters is that they ship a container load of recovered paper to China, it gets rejected, they have a total loss unless they can reroute the ship and send it somewhere else. So several of those folks that I've talked to have said, we're just going to wait until things settle down. We're not shipping anything to China anymore. So that kind of makes the problem even a little bit worse. Well, I told you earlier that those actions by the government worked. This is a good picture that shows you exactly that that's true. So this is a graph of imports of recovered paper by China. Y-axis is tons and thousands. And you'll notice around that July timeframe how the imports just took a sudden dive. Slight uptick lately, but boy, we're still way below where sort of the baseline was prior to that. So those actions have certainly had the impact of reducing the amount of recovered paper going into China. Now, if we think about just what's been happening with exports from the U.S. to China, this is a pretty interesting chart too. So what we're looking at is y-axis tons, time on our x-axis. This orange line is OCC, old corrugated cartons, probably one of the most valuable forms of recovered paper. I guess I'd have to think about probably sorted office paper, bleach sorted office paper, but this is the most widely used, very much sought after. The blue line, well, let's skip to the purple line. The purple line is that mixed paper, so sort of the unsorted recovered paper. The blue line is a combination of some bleach sorted grades, so that's sorted office paper, old newsprint, old magazines I've lumped all together here. The point of the slide is that if you look at this mixed paper exports from the U.S., it's fallen to essentially zero. Now, OCC and the other bleached sorted grades have fallen as well. Some rebound, but we're still below where we were before. But this is the one to keep your eye on. This is that unsorted mixed paper. Essentially no exports now from the United States to China. But what's interesting as I looked at this a little further is that OCC actually had been declining in terms of exports from the U.S. to China long before those restrictions were announced. So in this graph, the purple line is the 12-month moving average of OCC exports to China. The orange line is the 12-month moving average of the price of OCC to China. And what you can see is back around early 2016, we started to see a decline in the exports of OCC to China, and it just continued. Now, one other interesting thing that I'll note here is we often think about supply and demand and that driving price. Well, that's not really the case historically with OCC going to China. So just some statistical analysis here. This R squared, for you statistics folks, this is the coefficient of determination. This just describes the relationship between two variables. How much of a change in one variable can be explained by a change in another variable. In this case, an R squared of 0.02 means it's essentially zero. There's no relationship between the amount of exports and the price. So historically, this has been driven by some other factors, and if we get time, we may talk about that a little bit later. But that's not the case now because we're not in normal times. We have this artificial implementation of these restrictions to where now prices of these recovered paper grades are being certainly driven by the exports because there's not really any demand for mixed paper, for instance, and so the price has just plummeted. Okay, well, so what's the big deal here? Does China really need all of this imported recovered paper anyway? Well, short answer, yes. China is very dependent upon recovered papers. This is a pie chart from Fisher Solve, shows you that of all of the fiber that's used to make pulp, paper, tissue, packaging in China, 2/3 of it is recycled. So it's a big deal. And of course, a prolonged disruption in the supply of this very valuable and important commodity would be very damaging to China's paper industry. So China is very dependent upon recovered paper. In fact, China is not only dependent upon recovered paper, they're dependent upon other people's recovered paper. This pie chart shows of all of the recovered paper that's used in China, more than 40% of it comes from outside the country. It's imported. So China is very dependent upon those imports. And some of China's largest pulp and paper companies are very dependent upon recovered fiber. This again is a chart of all of the recovered paper that's used in China. You'll see that the 5 largest pulp and paper companies in China use about 1/3 of all of the recovered fiber in China. So it's a big deal to these companies. So these are very powerful, very large, very influential companies that are reliant upon the free flow of recovered fibers to keep their paper machines running. So yes, recovered paper is very important to China. And the world is very dependent upon China to take its recovered paper. So this just shows the destination of all of the recovered paper exports from everywhere in the world. Fully 50% of those exports are bound for China. So if this part of the supply chain gets turned off, everyone that's exporting this has a problem as well. What are they going to do with that paper? Well, so if recovered paper is so important to China, and we just seen the charts that show how steeply the imports of recovered paper has declined or have declined, how's the paper industry continuing to operate? Well, a couple things we can look at here. This chart shows us the import of a couple of different items. The orange line is the import of recovered paper. The purple line is the import of market pulp. You'll notice around here in the summer of 2017, here's that steep decline that we talked about in recovered paper. Around the same time, you see an increase in the import of market pulp. Now, obviously, you can tell that this is what, a little more than 1.5 million tons of a drop between this peak and this trough. But between this trough and this peak over here, at least, we've only seen about 300,000 or 400,000 tons of increase. One thing to remember is that this is not a 1-to-1 ratio because it takes more than 1 ton of recovered paper to make 1 ton of pulp. And it depends on which type of paper we're talking about to determine what that yield is. So it's not exactly a 1-to-1 relationship, but no matter what the yield is, the story here is that there has not been enough of an increase in the import of market pulp to offset the decline in the import of recovered paper. So, of course, that has to mean at least 2 things. One is that there's been an overall reduction in the demand for recovered paper and pulp, and that's because overall production has decreased. Some mills have simply closed, and that's probably by design. Others probably have been working through finished goods inventory, so they have not been replenishing that. And they've also been burning through inventories of raw materials. So they may have had big piles of OCC sitting outside their plants, and those piles are smaller today than they were before. That's kind of simple math. It has to work that way. Now here's another thing that has happened. Even though China hasn't increased pulp imports enough to offset the decrease in imported recovered papers, they've increased it enough to cause the price to go straight up. So this green line is the price of NBSK market pulp being sent to China. You'll see how it's got this hockey stick movement here, and then it kind of flattens off. These other lines are different types of paper that are more global in nature pricing, so it's sort of the North American based price for NBSK and other types of pulp, and you'll see that they've gone up as well. Now, you'll notice too that this line is flattened out, and so the rest of the world's price is getting closer to China's price, and that has to happen. This is just a basic financial principle. You cannot sustain a difference in commodities from one market to another that exceeds the cost of transportation or storage and transportation. This would just present an arbitrage opportunity. I could buy pulp, sit in my basement and buy pulp in the United States and ship it to China and make a profit. The market just won't allow that to happen. So one of two things has to happen. Either these prices have to keep going up or this price has to come down. At some point, they have to converge to a point that equalizes the difference in transportation costs. And that's what we're seeing happening. Now, this chart shows us the breakup or the makeup of the imported recovered papers going into China. Now, it's 2016 data from the United Nations Comtrade. That's the most complete data set we have for China. So in 2016, China imported almost 17 million tons of OCC, but these other grades up here, old newsprint, sorted office paper, and mixed papers, let's just think of these as bleached sorted grades. That represents about 12 million tons. Now, I just told you earlier that it's not a one-to-one relationship, but just imagine with me for a minute, so we'll just kind of set the stage here. Let's just imagine that it was a one-to-one relationship. To replace that 12 million tons of bleached fiber would require 20% of all of the world's global production of bleached market pulp. Staggering. And I don't care what you think the yield is, even if it's 50% on all of this, that's still 10%. It's 6 million tons, it's still 10% of the world's total supply of bleached market pulp. That is a game changer. So if we've seen pulp prices rise already, and if China continues to try to replace the absence of recovered papers with market pulp, we should expect to see pulp prices continue to rise. Well, who's going to be most impacted by that? Well, if you're the producer of specialty grades, for instance, you're probably particularly dependent upon purchased pulp. This is a chart that just shows different specialty grades. And the dark green bar is the total furnish at the head box, and the light green bar is the amount of furnish that's purchased, so purchased pulp here. You'll see communications grades, this would be things like C1S label and some other products. What is that? Probably 85% of the furnish is purchased. So it's a very big deal for producers of specialty grades. Now, some of these specialty grades are smaller, and also some of them have pretty high margins on some of their products, and so they might have a bit of a buffer, but I'm not aware of any company that wants to make more money or makes less money tomorrow than they do today. So rising pulp prices is bad for these folks no matter how much margin they're starting with. This is a similar chart, but it just looks at some other grades. These are some large volume grades produced globally, like uncoated free sheet or uncoated wood-free, consumer tissue and towel. Look at this, consumer tissue and towel, 70% of the furnish used to make consumer tissue and towel is purchased. So tissue and towel producers are also pretty dependent upon purchased pulp. So any increase in that very important cost input element is going to have a big impact. If you are a non-integrated producer, which means that you're buying all of your pulp or a significant portion of it, you're going to be at a real disadvantage to someone who doesn't have to buy pulp, who's able to create, who is able to make all of their own pulp internally. Well, let's explore that just a little bit more. We'll go back to that chart. These numbers, this is an index, remember, these are not prices. This came from our friends at TradeTree Online. And these three lines are just the index price for various grades of market pulp. At the same time, this green line is the producer price index for tissue in the United States. Well, this is a bad chart if you're a tissue producer because your costs have gone up and the price of your product has actually gone down over that same period of time. So this is just all of this space in here just represents margin erosion. And at some point that has to stop. Something has to change. So either one of two things will happen, maybe more, but at least two that I can think of. One is that producers would have to raise the price. Well, in some markets that's easier said than done. If you operate in a pretty fragmented market where most of the power is in the hands of the buyers as opposed to the sellers, you may not be able to raise the price. The other thing that could happen is that high-cost mills, as the margins keep getting thinner and thinner, they just close. They can no longer continue to operate because they're operating at a cash loss. So this could be a real problem for some of these tissue producers. Well, let's explore this a little further and let's narrow our focus. Let me pick on the German consumer bath tissue market for just a moment. So this is a cost curve that show each one of these bars is a mill making consumer bath tissue in Germany. Now I've cleaned this up so that this is only what we call conventional producers, so not TAD or any of those types of advanced technology machines, to try to make the cost curve a little more apples to apples. And let's highlight one of these mills. So this mill that I've now colored in pink is an integrated producer of tissue. They happen to be the highest cost integrated producer of tissue in Germany, bath tissue in Germany. But even though they're the highest cost integrated, they're $70 per ton lower in cost than the highest cost producer, who happens to be a non-integrated mill, in Germany. That's with pulp prices where they are today. But what happens if pulp prices go up another 10%? So I've just added the effect of a 10% increase in pulp price to the total cost of these non-integrated mills. And you'll see what happens is that our integrated producer, the cost advantage that they had before more than doubles. It goes from $70 to $154. But look, their position on the cost curve doesn't really change. But what happens if the price of pulp goes up another 40% like it has already? Well, now the shape of the curve starts to change even more. So we've added the impact of an additional 40% on top of that. Now you'll see that the cost gap between the high cost producer and our integrated producer balloons to $400 a ton. That's significant. The other thing that happens is you see that that producer moves 2 places to the left on the cost curve. So this is good news if you are this integrated producer. This is bad news, or if you are one of these non-integrated producers, because your competitors' cost advantage just went from $70 a ton to $400 per ton. That's a problem for you. It's not just a problem for these producers of bath tissue in Germany, though. Think about it if you're a supplier to these mills and not just a pulp supplier. What if you're a chemical supplier or a machinery equipment supplier, if you're a clothing supplier, whatever it might be? If the price, if their cost and competitiveness continues to get pressured and these mills are already under stress, you need to know about that. That could be a problem. Let's focus in on this a little bit more or dig a little further, but let's back out just a little bit here. So this chart, we're looking at all of Europe, and this is all of mills that are purchasing pulp. So every dot on here is a mill that is purchasing market pulp, and their space on the x-axis just tells us how much they're buying. The y-axis is from our benchmark viability module, and this is a measure of risk of failure of the mill. So down here is low risk, up here is high risk. So let's draw a box around these high risk mills, anything above about 6.5 or so, we consider to be at high risk. A lot of tons, 2.4 million tons that are in this box. And some of them are pretty good sized mills, and there are a lot of them. So their failure really poses a pretty substantial threat if you are a supplier to this industry, to these folks. So it's something that, so again, these people really have nothing to do with recovered paper in China, but some of the ripple effects are having an impact on these, and that ripple could continue throughout the supply chain, throughout the entire industry and all of the collateral pieces that feed it. But you know what? It's not bad news for everyone. Remember, I told you earlier about those 5 large companies in China that together use about 1/3 of all the recovered paper. Well, 4 of them are publicly traded companies, and they've recently released their earnings announcements. And look at these headlines. 9 Dragons, paper sales up 34%, income up 126%. Li & Man's income up 76. Shanying up 40. These are all record profits for these companies. So at least for now, these big firms are doing quite well, thank you very much, even in the face of all of these import restrictions. Things are going pretty well. Now, in part, it's because these big companies are able to get recovered fiber, and the price for the products that they make has gone up because some of their competitors cannot get all the recovered fiber that they need. So these big companies are enjoying a big windfall here. This is a chart that shows movement in the price of OCC. This is not a price. This is just an index. It comes from, this is a producer price index. The U.S. government calls it the corrugated waste paper index. I get in trouble for using that term because I just told you when we started that this is not waste paper. I need to write a letter to the government and tell them to change this because this is OCC. This is a very valuable raw material. But what you'll notice is that out here at the time those import restrictions were announced, remember, OCC was not part of the ban. This is not banned. It's just that the quality requirements have been tightened so much that many suppliers can't meet them. And so they've stopped shipping to China. So you'll see that the price has fallen by 50%. Again, remember, historically, price and export volume have not been related. But when you have these extraordinary sort of unnatural events in the market, that's what we're seeing now, is that they are suddenly related. So if you are a buyer of OCC, things are pretty good for you right now because prices are low. If you're a seller, a collector of OCC, you're not very happy because the price of your product has dropped. Pardon the blatant commercial here, but I feel I want to make sure that you're aware of this. At Fisher, we, along with our partners at STE, actually have an OCC price forecast that goes out into the near and to the longer term. We model a base case, and then we can also model several different scenarios that show various actions by Chinese government or any other market impact. Again, we sell that. If it's something you're interested in, let us know, but I at least wanted to make you aware of that. Okay. So I said that, again, this is not bad news for everybody. Here's another great example of that. So this chart, the axes here show a margin percentage or profit percentage. The purple line is a pulp producer. These are actual companies. It doesn't matter who they are, but they're probably representative of their space. So the purple line is a pulp producer. The orange line is a container board manufacturer that uses a lot of OCC, a lot of recovered paper. Well, look what happened. In the summer or so of 2017, their profit margins started to skyrocket. They essentially doubled as a percentage during that period of time. So if you're one of these folks, or if you're a shareholder in one of these companies, you're pretty happy right now. So these markets are pretty good, and they've been good for a long enough time that they're starting to attract new capacity. Let's take a look at that. This is a potential problem. So the y-axis here are tons, annual tons of capacity. This purple line is kraft pulp capacity, all types of kraft pulp. This out here in the past is the actual capacity, and from here on forward, this is the extension of that trend line. So if you just drop the trend line on it, if the future looked like the past, this is where we would expect to be in 2023. Same thing for linerboard. This is historical. This is an extension of the trend. These dotted lines reflect announcements of new capacity additions that are already on the books. They've already been announced. You'll notice that this market pulp, there's a big departure now from the trend line to this announcements, and really a pretty big departure in linerboard. The linerboard trend comes back and these two converge, but something I'll point out about both of these, you notice how these flatten. That just means that we don't have any more announcements for projects out into the future, but that doesn't mean that they won't come. The takeaway from this slide is if these lines get too far apart, unless demand increases dramatically, we could find ourselves in a situation where we have way more capacity than we need, which would then cause the prices of these products to begin to fall again. So that's something to be on the lookout for. Okay, so what happens next? Well, it's a very interesting chart, came from our benchmark cost module here. What you're looking at is a cost for Chinese producers, all producers. This is the cost for those Chinese producers, the aggregate cost for them to get internally produced, non-de-inked recycled fiber to their head box. So this could be like mixed paper, OCC, whatever. It's just think of this as brown recycled fiber, that pulp that gets to the head box. Look at the difference here. This is purchased unbleached craft softwood. So let's just imagine that this was all OCC, longer fiber, and you needed to replace that with craft softwood, also longer fiber. The cost is what, 2.5 times to buy market pulp than it is to produce your own pulp internally? Similar story here. This is de-inked fiber, so maybe this is more bleached grades. And I've purchased bleached eucalyptus short fiber pulp on the chart too. You'll notice that it's almost twice the cost. So again, the takeaway here is that I just don't see how Chinese producers can go for long with buying this higher cost pulps. Now, to be sure, for some producers, the cost of getting this material may be way up here right now. If you're a small producer, maybe you can't get it and you're paying anything that you can. But for the long term, I just don't see how it's a sustainable solution to replace this internally generated recovered paper with purchased market pulp. So what's China going to do? Well, a couple of scenarios here. If China holds firm on these restrictions and says we're not relaxing them, we're not removing them, they're in place, they are what they are. Well, sooner or later, and probably a lot sooner than later, Chinese producers are going to be out of inventory and they're going to have to get fiber from somewhere. Well, we just shown you that chart that says, at least in my opinion, and the numbers back this up, it doesn't seem like buying market pulp is a very attractive option for the long term. So Chinese companies could build virgin or fresh fiber mills wherever the natural resources are available to make pulp and then export that pulp back to China. Well, that could work, I suppose, but that's really more of a long-term solution because you can't build a pulp mill next week. That's a long-term, probably multi-year project to get that done. That's not easy. Again, another issue really is related to softwood fiber because it may be easier to get hardwood fiber into the system than softwood fiber. And so that replacement for OCC is going to be probably more difficult than a replacement for some of the other grades. Well, if they don't have time to wait to build mills, maybe Chinese companies could just buy an existing pulp mill and then start shipping the pulp back to China. Well, that's actually already happening. We know that APP, I understand they're not a Chinese company, they're an Indonesian company, but they have a huge presence in China. APP owns Paper Excellence in North America. They have just recently purchased El Dorado in South America. They tried to buy Fibria in South America. So this company is actively buying market pulp assets, and we know that there are other Chinese companies that are on the lookout for existing pulp producing assets. Another thing that could happen is China could just close some of this troublesome capacity, right? China's got a lot of small, old mills that are not very environmentally friendly, and probably the government would like to see them go away. So some of them could be closed, and that would reduce the overall demand for recovered paper down maybe to a level that's closer to the supply that's available if these restrictions stay in place. But what that would mean is, unless the demand for those end products really went down, what that would mean is that Chinese firms would then have to import things like linerboard or whatever it might be back into China to meet the demand for those products. And that's possible, and that could happen, and we think there's probably some discussion going on about that. But there are other issues around that, as what does that do to employment in China? If you shut down those paper mills and they get, the new mill that you build happens to be in the United States or Australia, it doesn't help the Chinese employment situation. So we actually think what's more likely to happen is that China will just gradually ease these restrictions on recovered paper. They'll grant the import license only to the most viable companies, some of those 5 that I mentioned and probably some others. They'll be able to get all of the recovered paper that they want, and they'll sort of ease into that most likely. And it almost has to happen that way, because China just needs the product that's made from recovered papers, right? So if you think about corrugated boxes, they have to have boxes to put all of the goods that they make and then export throughout the world. China's export economy is so largely impacted by exports that go to the U.S. and Europe and other parts of the world, and they all go in a box. So they have to do that. They have to find a solution to this problem. I mean, the industry and the country in total, they just have too much to lose to allow these paper machines to just go silent. However, remember, these large influential Chinese companies are doing really well right now. They're making lots of money, record profits under this current system. So they don't have a big incentive to see these restrictions lifted anytime soon. So that makes determining the timing of when these restrictions are going to be lifted very, very difficult to predict. It almost becomes a very, very subjective decision made by perhaps some government officials and with some other discussions. And we also think that Chinese firms are going to continue to look to add market pulp assets to their portfolio, either through greenfield expansions or probably more likely through the acquisition of some existing assets. And they may also look to build some finished product mills outside of the country as well. So we think that's probably going to continue to happen. And at the very least, that just provides a hedge, if you will, for some of these Chinese firms against something like this happening in the future. Okay, well, ran a little over on time. Just remember that we're here to help you kind of think through some of these issues. If you need some help with that, that's what we do. I'm going to leave this slide up to show you my contact information that you can jot down if you want to reach out to me. I'm happy to answer any questions.